fun news out of the COMEX, where silver is on the move. Here we have a graph of the most recent silver stocks on the commodity exchange in New York. And we see a big move down to 93.2 million ounces. About 6 million ounces were taken off warrant into storage on the COMEX this week. That is the most since July, when you can see this big drop in registered stocks. And as of yesterday, some of that metal, 700,000 ounces, I believe, is moving out of the storage facilities entirely. If the Fed cuts into a falling stock market in the face of rising consumer prices, then that would be them capitulating, saying we're not even going to chase consumer price inflation. What do you think happens to silver when that happens, when the public understands that even though prices are rising on the consumer level at 6% and faster than that, and the Fed cuts just to save asset prices, to save the millionaires and billionaires on Wall Street, what do you think the public is going to do to the dollar?
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And once again, this week's weekly silver report with Rafi Farber of the Endgame Investor, digging into some moves on the COMEX, the open interest, and what to look out for with tomorrow's inflation report. So with that said, here's Rafi's silver report.
Hey guys, Rafi here from the Endgame Investor, coming to you with the fourth weekly silver report for Arcadia Economics. We've got some interesting charts, as always, some that you probably have never seen before. Signs of a long-term bear market bottom in certain terms that I will show you in the next slides coming up in this video, and some very unique news about the silver coin that was found in Jerusalem 2 weeks ago that has some interesting numbers involved. Let's go to the news. December 7th, 2021, 2 days ago. Today's December 8th. More on that coin found by that 11-year-old girl. There's a picture of it. It is a pure silver coin of 14 grams. But the really cool thing is that there was only one place that you could find pure silver in Jerusalem at that time, and that was in the Holy Temple itself. Says Dr. Robert Kuhl, this is a rare find since out of many thousands of coins discovered to date in archaeological excavations, only about 30 coins are made of silver from the period of the Great Revolt. That was the years 68 and 69. The silver from which the coin was made came from the plentiful silver reserves in the temple, and that it was minted on the Temple Mount Plaza, possibly by one of the priests who worked in coordination with the rebel leaders and assisted them. Where else could you find silver in such quantity and such high quality in those days? Only in the temple. If so, we can say with caution that this coin is apparently one of the only items we can hold today that originated on the temple itself. One of only 30 coins, eh? Well, 30 seems to be a magic number. That was where we got to on Silver Squeeze. That is a double top that we got to a few months later. That is the level that is buzzing around, that if we beat that level, if we break through it, then silver can go towards the old high of $50 established in 1980 and 2011 and finally break through it to a new monetary era. We'll see if that holds water or silver, as the case may be. But for now, let's start with some fun news out of the COMEX, where silver is on the move. Here we have a graph of the most recent silver stocks on the commodity exchange in New York. And we see a big move down to 93.2 million ounces. About 6 million ounces were taken off warrant into storage on the COMEX this week. That is the most since July, when you can see this big drop in registered stocks. And as of yesterday, some of that metal, 700,000 ounces, I believe, is moving out of the storage facilities entirely, moving to somewhere we do not know by who or for what, but it is moving, and we are at a new low for the year. There's also another low that we have found also on the COMEX, and that is an open interest in the silver contract. Here you see this red line and the two circles I drew. You have open interest below 140,000 contracts at 135,977. The last time we were at that low of an open interest number of contracts open was in May of 2020, just before the major breakout that happened in June and July. Low open interest means there is very, very low speculation in silver right now. There's no interest in it, and there's a lot of room for speculative interest to drive the price higher. Except back when we were at this amount of open interest, the price was at around $14, and now it is just above 22. So we are step laddering, stair-stepping our way up, but there's more. For the technicals, we are at a very critical juncture here, and not just from this chart, but I will show you from other chart why this is critical as well. We are at the fourth test of these bottoms established back in September of 2020 after the high at $30. It retested itself here in November, tested again in September 2021, and now we are testing it for a fourth time at a level of about $22. And this sort of quadruple test of a trading range has happened before in silver, and I will show you what happened when that last occurred. This is what happened the last time we had a quadruple testing of a trading range. Here, you see back in 2011, we hit the $50 high of April, May 2011, and then we start to fall. The first test was here in September 2011, mirroring this level here from before the breakout to 50. A double test over here, the same level just before New Year's 2012. And here again, June, July of 2012. And finally, you'll remember April 2013 was the big gold crash and confirmation that we were in a bear market. Gold had lost something like $130 that day, and it brought silver down to about $22.50. And that shows that once you have that many tests of a trading range and it breaks through, then you are in a protracted bear market. Will that happen this time? I doubt it, given the price inflation numbers and the monetary situation that we are in. I think that we're going to bounce off this level, and if it's going to be a break, it will probably be a marginal break to scare out the last speculative longs and clear out the sentiment for a new run. This is a chart of silver priced in the S&P 500, meaning how many units of S&P 500 you can get with 1 ounce of silver. See here some very interesting numbers. On September 17th, 2018, we bottomed in this ratio at 0.0048 exactly. Then in March 2020, when silver was crashing, we bottomed again at the same number of 0.0048, March 23rd, 2020. We are testing it once again at that same exact level of 0.0048, which you can see I boxed over here, and this is the latest number over here where my arrow is circling. 0.0048. Looks like we have bottom in place possibly for silver versus stocks. Here you can see again the triple bottom of silver in terms of stocks. 0.0048, another one here, another one here, another one here. The only time that silver was so cheap relative to stocks, or cheaper, was during silver and gold bear market bottom between 1999 and 2002. That was the only time in history that silver was so cheap in terms of stocks. This has been a 10-year bear market so far for silver in terms of stocks, topping in late 2011 and possibly bottoming right here. Silver has never been so cheap, except one time in history relative to equities. Finally, I wanted to point out when economists or people who claim to be economists try to pull fast ones on us by contradicting themselves without openly saying so. This week's edition features Mike Shedlock, who sometimes dresses up as a sound money enthusiast, warning about inflation and rising prices and so on. But in my view, he is an inflationist in sound money clothing, and he doesn't really understand money or prices. And here I will show you exactly what I mean. These two articles are only a few days apart, and they contradict each other flatly. An article on the Mishtalk blog from December 3rd, 2021. The title, Huge Bond Flattening Continues. What does it mean? By bond flattening, he means the spread between 10-year rates and 2-year rates, or the yield curve, which is falling, and that is true. And that generally means that the market is expecting a rate cut. Here in this subsection, he asks, what's it mean? And a tweet. By the time the Fed finishes tapering and gets around to hiking, will that ever happen? There will not be much inflation, by which he means consumer price increases. Inflation, he says, is in the rear view mirror. That is the clear message from the bond market to anyone paying attention. Finally, he says, if you are paying attention instead of screaming about inflation, the answer is pretty easy. By the time the Fed finishes tapering and gets around to hiking, will that even happen? There will not be much inflation. Inflation is in the rearview mirror. That is the clear message from the bond market. So says Mish on December 3rd that the CPI is done rising, that we don't have to worry about consumer price gains. Everything is fine. Gold and silver are probably going to go down because of this, etc., etc. And then what does he write on December 7th, only 4 days later? Let's take a look. Productivity decreases the most since 1960, but labor costs surge 9.6%. What's going on? What's going on? He says, he notes 6 points. 1, in the scramble to find workers, employers are accepting nearly everyone who applies and at increasing pay levels. New employees are not well trained and are not as productive, yet they cost more. 2, 3 rounds of stimulus paid millions of workers, more being unemployed than employed. They have not all returned to work and some won't. This puts upward pressure on wages. 3, child tax credits come into play. Biden wants to extend them, pay people enough not to work and some won't. 4, job jumping compounds the problem. Even skilled labor is not as productive initially at a new environment. 5, shortages impact output. For example, if you need a chip, you can't finish a car. 6, boomer retirements. Skilled boomers are retiring in mass. They are replaced by less skilled labor. So what is Mish saying here? He's saying that consumer prices will keep rising for those 6 reasons. So what does he mean when the bond market is predicting lower price inflation on the consumer level? He's wrong. What he doesn't understand is that, yes, the bond market may be predicting rate cuts, but that would only be because the Fed would be forced into rate cuts in order to save asset prices, meaning stocks and bonds, not consumer prices. If the Fed cuts into a falling stock market in the face of rising consumer prices, then that would be them capitulating, saying we're not even going to chase consumer price inflation. And what do you think happens to silver when that happens, when the public understands that even though prices are rising on the consumer level at 6% and faster than that, and the Fed cuts just to save asset prices, to save the millionaires and billionaires on Wall Street, what do you think the public is going to do to the dollar? Yes, there might be rate cuts in the future, but they're not going to be rate cuts in the face of calming consumer price inflation. They're going to be rate cuts in the face of raging consumer price inflation. And that is going to be the signal for the public to abandon the dollar. Many will move into gold, and even more will move into silver. It is only a matter of time. This is Rafi, the Endgame Investor, coming to you with this week's weekly silver report for Arcadia Economics. And I'll see you next week.
Thank you, Rafi, for another incredible silver report. I know people really love it. I'm enjoying them, and it's nice to have another perspective covering another angle of the silver market. So appreciate that. We'll look forward to seeing you next week. And this week's episode was actually brought to you by the Big Silver Short. I know there's a lot of new interest in the silver market, and fortunately, a lot of people who are diehard silver fans and who are well aware of what's been going on, they've already been aware of the Big Silver Short. The book that I wrote was interview format with 15 of the world's top silver experts. And if you go in the link in the description field below, you can get your copy now. Great for Christmas presents. You can share it with the family. You can also find it at arcadiaeconomics.com/thebigsilvershort. So go click the link in the description field now, and I will see you again tomorrow.